Referred to by some as the godfather of Wall Street, Warren Buffett is a titan of investing and has been for as long as most of us can remember. But how is it that after all these years and everything that has changed in the world and the market, that people still look to him for guidance? Warren Buffett has long supported passive investing in the S&P index, even going so far as to say that a bet against the S&P is a bet against the USA. However, in this time of economic uncertainty, the CEO of Berkshire Hathaway is holding large sums and abstaining from following his own advice. So, why is this juggernaut of the financial world suddenly not taking his own advice? In today's video, we're gonna find out. Throughout his many years as the king of Wall Street, Warren Buffett has seen his share of ups and downs, and even a few market crashes, but has survived in spite of all this, even being notorious for earning big on market upsets. Whether it was a time of bear market or bull market, Buffett has always found a way to make money regardless. No one can predict the market with 100% accuracy, but Buffett has been around long enough to know what to look for, and the fact that he is now holding large sums of money to buy up cheap stocks lets us know that the market is due for another crash. But whether that will happen today or in a few months, no one knows for sure. One of the factors to look for is the stock valuation and how it relates to the actual value of the company. For example, Tesla's market price has surged to a point beyond rationale, and some big investors have already taken this hint to tap out. Beyond Buffett, Cathie Wood's recently offloaded tons of Tesla stock, and billionaire Bill Gates has liquidated stocks he has held for a long time now, indicating that they too can smell something coming. Warren Buffett is a master researcher, getting to understand the fundamental value and long-run advantages before buying into a company. Though usually in a bear market, his strategy is to buy up tons of undervalued blue-chip stocks at a massive discount, and because of his vast reserves of capital, he can solidify very favorable investment terms, as his investment could make or break a struggling company. Unfortunately, these terms are not something we are made privy to, as the majority of his investments are in a class of secured stocks with their dividends confirmed and future stock warrants available below market value. This is all part of Buffett's successful model, which has allowed many investors with his company to benefit financially. Rather than focusing on day trading and short returns, he plays the long game. One huge advantage of having these massive cash reserves, calculated to be over $140 billion, is choices. Something most investors don't really have, as their capital is all tied up in the market. Buffett has recently drawn criticism when he warned against investing highly leveraged companies or businesses in weak competitive positions. But he justifies this saying, when a recession hits, those are the first to go. This leverage in a bear market makes debt more expensive and can cause a liquidity crunch. That $140 billion Warren Buffett is holding is seen as a safe measure in hopes of ensuring high returns in the future. But in order to get that $140 billion to start with, he had to make a lot of great choices throughout his career. He is consistent and he follows a plan, so there is confidence in his new strategy. Buffett always says that bad news is an investor's best friend, where you can buy up a chunk of the future for a massively discounted price. In this time, investors need to be focused on the end game. Ignore the daily fluctuations and trends of day traders, for it is better to look foolish for a short time than to lose everything in the name of courage. Despite the judgment for holding that obscene amount of money, Buffett is surely okay with looking silly at this time as long as he can avoid the consequences of a market crash. As always, Warren Buffett is focused on the big picture, and by his actions he is signaling that another big crash is coming. From 2008 until now, he has more than doubled his reserves, implying that the coming crash will greatly outdo what we saw back then. In short, it's really time to start taking this imminent threat seriously. To sum it all up, in spite of the recent growth on the market, Warren Buffett has chosen to hold his billions in pocket instead of making a huge earning on Wall Street, something he has been widely criticized for. Luckily though, an investment god of this stature doesn't seem to care too much about what anyone else thinks. He knows what is coming and he's ready. It may be too soon to predict the coming crash, but following the titans of the industry like Buffett can help us prepare for the storm and ensure we come out the other side looking better than ever.